I have my really good friend Michael Zuber on. Man, there's been a lot going on in the last. It's been 2 weeks since we last talked. There's been a lot going on. Mike's going to give us an update. I want to start off with Elon Musk backing out of Twitter. I don't. I think Twitter loses even if they take it to court. What are your thoughts?
I don't. Yeah, I think. Well, first off, I think Twitter is a broken business model. I think it's the worst run social media company. I think they have been banking on Fortune 500 customers who I think are going to run away. I think there's a chance that Twitter doesn't survive until the court ruling. Because again, any this kind of litigation can take 7 years. And then you have a shareholder. I don't know if you saw this, but Mr. Wonderful from Shark Tank just lit up the Twitter board, Twitter employees yesterday, basically saying it's the worst company ever. So
Really,
I think Twitter's in real
see that.
trouble. Yeah. Oh yeah, it's you should. I found it on Twitter. It was an amazing. It was a video. It was like 2 minutes long. Mr. Wonderful from Shark Tank just went off, and he's an investor. He's got millions of dollars in Twitter stock. He's like, I already wrote it off. I took it to zero. It's not worth anything. It's like, wow, he's going ham.
Well, the biggest thing with Twitter, with the bot thing, I think Elon Musk has a legitimate argument because he's like, everything we do is brand awareness. And if you're saying this many people will see it, and then 40% of that is bots, then like it's bad. It's really bad. Like
And
as far
again,
as being a money that makes business.
yeah, and Twitter's never had incentive to, frankly, produce a real number. They're given their current business model, they're discouraged. They like bots in their current business model. That's just more active daily users. It's kind of a wacky business model.
Exactly. All right. What's your next big piece of news?
Well, the thing that you really need to be watching is the yield curve inverted this week and is still inverted, which means you can borrow money for 10 years less than you could borrow money for 2 years. That is not supposed to happen. Long-term money is supposed to be more expensive than short-term money. And yield inversions have historically indicated a recession is in the offering in 6 to 18 months. So not good.
So everything that we've been talking about is we keep getting more and more and more pointers.
Yes.
So what was that video you posted the other day on your Instagram of that reaction to that guy? Talk about that.
So there is a YouTube channel that has been calling a crash since 2020. And I finally had enough. I had my team go and find different dates where he called a crash in different cities like Austin and LA. And then what I've done, and there'll be a video that comes out tomorrow, 5 p.m. on Sunday, where I go in and break down the numbers. Like LA. Let's see if I have the numbers close by. Oh, I have them. So LA, just for example, he did a video September of 2021 saying that LA County was going to crash. So what did I do? I'm a data geek. So I found that LA County's median home price in September of 2021 was $866,000. The real issue with this idiot is the 30-year rate, Stratton, was 2.9%. Lifetime cheap. So the payment, assuming zero down, is $3,605. Okay.
Wow.
Let's fast forward to today. The median home price in LA is now $928,000. You're down $60,000. The real problem is your interest rate is no longer 2.9. It's 5.91. Your payment now is $5,512. So this idiot, this moron, is basically not taking $60,000 away from you, which is not really even the issue. The issue is in September of 2021, interest rates were at lifetime lows, and he said, don't buy. Your payment is now $2,000 more expensive in LA if you listen to this idiot. So prices in LA have to fall 35% just to get back to even. So if you want to know what 35% is on 928, It's basically $350,000. No chance in hell. This guy, because he is more interested in clicks in getting paid than helping people, cost people. I mean,
That's a lot of money.
dude, it's mind-boggling. Even if you think LA County goes down 10 or 15%. And oh, by the way, it's now 850 instead of 866. The interest rate is what kills you. This guy hurt people, and I've had enough. We found 4 clips of him calling crashes. I've done the dates just like this. And again, some of his crazy crashes, like Austin, Texas. Austin, Texas has to fall 43% just to get to even. This idiot only thinks about price. Real estate's not a pricing game. It's a payment game. Payment. And whether you like it or not, 2020 and 2021 were the second and third best year in 52 years to buy a home because you could get a 30-year interest rate under 3%. This moron told people not to buy because there's a crash. He did this because he got paid. He wasn't trying to help people. Selfish motive, broken record, doesn't understand basic math. It was horrible, just bad.
So you in a legit YouTube beef with this guy?
Oh, I don't know if he's recognized it, but people are certainly calling it out. I mean, he dwarfs me. He's 7 times bigger than I am. He probably makes 7 times as much money. But the good news, I don't do YouTube for the money. His YouTube channel stops. People stop watching. He goes broke. People don't watch my channel. Who cares? I live off my rental income. It's a different ball. We're playing a different game.
Completely different game. All right. What was the other big news that we had?
Well, Bay Area housing, San Francisco screwed. San Francisco actually had median home price fell 3%. All In podcast, I don't know if you watched it this week's talking about downtown San Francisco having 40% vacancy. There's about to be office buildings foreclosed.
The commercial wise, that shit is wild. I didn't know that if you'd cover your debt to income ratio or whatever, in a commercial, like as soon as a tenant moves out, like they're foreclosing. They don't care. They don't care if you can take the strokes.
Well, let's be clear. They have the right to, but not the obligation.
Okay. I was like, that is nuts. Like, I wouldn't sign up for that shit.
Yeah, it's called a DSCR loan. And it's in most multifamily loans. So it's not only commercial, it's in apartments, it's in warehousing, it's in all these things. And yeah, San Francisco, again, adopted a whack tax policy. This is, again, the progressive left being stupid. So what did they do a year ago? They basically said, hey, if you are headquartered in San Francisco and your CEO makes more than 40x the average employee, we're going to tax you 1%. Just for the right to keep a business in San Francisco. So guess what happened over the last year?
Everyone left.
All the tech companies left, biotech left. They're like, screw you. We're going to go down the 101 and we'll be in San Jose, or we're going to go to Texas or Vegas where we're treated better. And guess what? Now you got 40% vacancy. You freaking idiots. You did it to yourself. So stupid.
So define a DFCR loan.
Debt service coverage ratio. Basically, when a bank takes on a large investment, we're talking hundreds of millions of dollars.
Yeah.
They want to be ultra conservative. And basically, they want to have a 1.2, 1.25, 1.3 DSCR. Basically, the net operating income is enough to cover the debt payment plus 30%. However, when you have 40% vacancy, it's not going to happen. You're going to be upside down. You're going to have to come out of pocket to pay for that building. And it is very likely that you are going to see office buildings foreclosed on because everybody got new debt. All the cap rates are exploding. You got huge vacancies. Dude, San Francisco, it's going to be a train wreck because of these stupid tax policies. It's moronic, but they're going to get what they deserve.
Right. Well, I see their commercial stuff collapsing. I thought their residential stuff was going to go down faster.
It's coming. It's much stickier. That's sticky. Real estate moves a lot slower than we naturally think. It did go down 3%. It could go down 3, 4, 5% a month. It'll just take time. Like Fresno, where you and I invest, it went down 75%. Which again, when people hear that, like, oh my God! But then you say over 4 years, and it's like, well, okay, it went down, but it's a lot. It's not stocks. It's not crypto. It's not NFT. It doesn't happen in a weekend or a week or a month.
Okay, speaking of crypto, did you have any of your money in any exchanges?
No chance.
This shit's getting wild.
No chance. No, I mean, you and I had a video, what, 3, 4 months ago, and I think I said 20 or 30% of the top 20 coins are going to zero.
Are going to zero, and you weren't wrong. I was like, no,
Yeah, you
no
didn't think
one.
I was right. Yeah,
No, I
swear to
was
God.
like, no, no way.
He's full of
Nobody's gonna
shit.
lose
Yeah,
billions of dollars. He's just making a call. Billions gone out of thin air like that overnight.
like I know what I'm talking about.
Oh man, because bro, I had so much faith. Like, what? Like I was like, they're stable. There's nothing really going on here. Like, there's no way they could all go away. To where I think legitimately, like, there's going to be 5 left over the next 3 years.
Exactly. And it'll be the 5 with the real development teams, real use cases, real value, and we will just build a new. Dude, there was so much fraud in legit Ponzi schemes in crypto,
Yeah,
and people didn't see it. Dude, when a crypto company is paying you 18% interest to store their crypto, that's a
month
sign.
over month, but like
Dude,
not
that's
yearly, month over month.
who gives a shit? That is a sign that there's some stupid shit going on. Come on, be smarter than that.
What? So one thing, I'm so naive because I wouldn't do stuff like that. I wouldn't think other people would do stuff like that, right? Just create like active, like very blatant Ponzi schemes.
Dude,
You
the
know what I'm
CEO
saying?
of Celsius has a CEO that says banks are evil. Well, what the fuck's a fraud, you jerk off? Yeah, it's crazy.
Yeah, Celsius was bad. I know like the Doquan dude. Who, I don't, what was he running? He was running Luna. Everybody's hating on that dude's going to get demolished. Well, the CEO of Celsius got caught trying to evade America last week, I believe. Like he was trying to
Okay,
fly away, and they stopped him. Like that.
good.
That's crazy.
Dude, there's a there. I hope people go away in orange. There were people that lost their life savings because of these grifters and these thieves. It's really
Bro,
sad.
define grifter. I didn't hear until I started listening to All In. Is that a
Base,
techie thing?
no, it's actually an old. It's a very old slang. It's from the grifters from the Depression era. It's basically somebody that sings a song of sweet nothings and gets you to take money out of your pocket and then disappears.
Okay,
Yeah, their whole story was to get money out of your pocket. That's basically a grifter.
essentially, yeah. It's that
Yeah.
that part's over. I still think crypto's going to the moon. I still think Bitcoin is the future. I do. I do. I still
Well,
think
it depends how long
Bitcoin.
your future is.
Yeah, it depends on how long your future is. But I mean,
I
if
still have
I
some. Again, I told you, like I
you
did
didn't
back
sell any
then.
of it, did you?
No, dude, people don't get this. I have 1% of my net worth in crypto on purpose. I bought it over a 2-week period. I haven't touched it. I don't look at it. It is an insurance policy. If it goes to zero, who cares? It goes to the moon, who cares? It's the same thing I did with silver and gold 20 years ago. I just got a bigger stack now, and I don't want to store that much silver, so I chose something else.
I mean, but so the only Warren Buffett got me because he was like, I wouldn't buy all of the Bitcoin in the
For
world
25 bucks.
for $25. But then like he was like, well, because like I own it all, and so then like it automatically loses all of its value.
Exactly.
I was like, fair enough, but then that'll never happen.
Yeah. No. I think the wild news is does Bitcoin go low enough where Michael Saylor gets fired?
Is Michael Saylor the dude who told a bunch
Yeah,
of family offices like, no, you need to like take out loans to get into this?
yeah, he's the CEO of MicroStrategies. The MicroStrategies, at least to my
Oh
knowledge, is
yeah.
the largest holder of Bitcoin.
No, I think they'll stick with him, dude. I mean,
I
it's
don't.
his fund. Right? It's his fund, isn't it?
I believe I could be wrong. MicroStrategies is a public company. Public companies have
But it's
one of
only backed by Bitcoin, correct? Like it's
no. MicroStrategies was a software company, and they just took their balance sheet and started buying Bitcoin because Michael Saylor is the Pied Piper. He took out loans and all this stuff. Um, no, there is, I don't know how much stock Michael Saylor owns of MicroStrategies, but if he doesn't own 51%, there's a chance he gets his ass fired because the board of directors at some point needs to be reminded that they're a software company, not a crypto warehouse.
yeah.
We'll see.
I think I don't know if they're as on board with him as he is convicted about Bitcoin. they won't fire him for 3 years. And like after the winter's over, if they're as on board as he is convicted, that is the big thing.
I totally disagree. All crypto has to do is have a washout to like 7, 8, 9 grand, and he's gone.
That hurt.
That's all that has to
That would
happen.
hurt.
And again, it could bounce back, but if again, I'm not calling. I'm just saying if Bitcoin had another one of those days, and another Celsius or Doge or whatever the heck these people are is a criminal, and it crashes because of liquidations, he'll get fired in a moment. At some point.
What were some other big talking points? I've been so busy this week. I listened to the All In podcast, but it was like as I was doing stuff.
June jobs was the big number of the week.
There's my alarm to hop on the call with you.
Yeah. So June jobs number came out. So I'll tell you right now that there's a lot of talk about Q1, Q2 being a recession. I can tell you right now there's no chance in hell a true economist will call a recession in Q1, Q2, even if they're both negative GDP. The reason
Why?
is
Because you think the jobs numbers so up?
Yeah, I actually did the math. We created 2.4 million jobs. We created over 370,000 jobs every single month. There are 4 factors that drive a recession: jobs, retail sales, industrial production, and real incomes. You cannot have a recession when you add 370,000 jobs every month for 6 months in a row. They're not going to call it. It'll be the first time since 1947.
That you've had GDP growth, but it's not a recession.
Correct.
Do you think the jobs will keep going up?
I think they're slowing down. Right, the unemployment rate is still 3.6. You can't have a recession at 3.6% unemployment. I think unemployment by the end of the year is in the high 4s.
So before, what has looked like this situation in the economy before, like at any point in time? That you
know, near as I can tell, I haven't studied the 40s a lot, but there are certainly some 40s attributes that maybe warrant more inspection. I've often thought the 70s were the best indicator. I think
now it's a little bit different though.
Yeah, I agree. Yeah, I think there's a combo 40s and 70s. Again, you have to look for high inflation. You have to look for low jobs. It's just, in the end, this is the first time ever. This is what we're really in. And kind of the All In podcast said this as well. This is the first time we rained $9 trillion on people. And now we have to suck that liquidity out. So this is like no other time.
Yeah.
Yeah, this is like no other time. That's what I've come to believe.
Yeah, you have to suck all the liquidity out. What else were they talking? They had another good point about, Chamath was like, dude, this is so uncalled for. He said, what was he talking about with that liquidity? To where we need to suck it out, and then the inflation is not going to go away anytime soon.
Yeah, he was
like, your rates going up will not do shit. He was like, this is going to be a very, very, very long-standing thing.
Yeah, what Chamath was talking about, and again, I like Chamath. I like the way he thinks. He's basically saying we have entered a supply generated recession that is going to morph into a demand recession. And he's like, dude, he's basically saying all assets are getting whacked. He's basically saying the pain in the stock market's just starting. That's basically what he's saying.
I don't know, dude. I mean, what are we at all time right now? What
do you mean?
Go ahead. What were you going to say?
I don't know I was going to ask you, I mean, are you in the stock market is what I was going to ask you. Are you invested? Do you own stocks?
No, dude, I refuse. I refuse to do the stock market because I have real estate businesses, and then like whatever you could put in bonds and stuff, and I feel safer having it in my own pockets and investing that into marketing or real estate where you can get like a better return.
Love that. Okay, cool.
But so like we hit all-time highs over, let's say, the last 10 years. The stock market had multiple all-time highs.
Mm-hmm.
So he thinks it's going to cut itself in half again.
Mm-hmm.
Like he thinks it's like a true, like if we talk about Bitcoin's going to $3,000.
Yeah.
What would be the causation of that though? Like
Well, there's a couple of
we
things.
have
So
jobs,
in this,
rates are going up, but
Mhm.
rates going up doesn't really solve shit as far as all those different variables.
Well, dude, um, I disagree. Rates going up is going to decimate the real estate business. The housing market is going to see a 50% cut in transactions. There are going to be real estate agents that have to become baristas. There are going to be mortgage brokers that have to work at Walmart. We're going to see a lot of 80% of I think they did $4 trillion in cash out refis over the last 10 years or something. That's going to go to nothing. The amount
Yeah,
of money churning in the system is going to, that's going to be a problem. That's going to lead to a recession. I believe the housing market leads to a Q3, Q4 recession. So yeah, the raising rates does impact the most levered asset people own is housing, and rates affect housing. Housing is 15% of GDP. If you take 4% of housing off, what the hell's going to make it up? Nothing. GDP is going down.
fair
Housing's a
enough.
problem.
Any other variables besides housing?
Well, again, I think there were like the All In podcast talks about all these companies that were running on being sold or raising at 100 times revenue can't raise anymore. A lot of startups aren't going to get second and third rounds. They're going to have to cut to the
Yeah,
bone. They're going to have to cut advertising. The consumers, dude, it's going to be all kinds of bad. It's going to
yeah, but I
be
mean
bad.
those companies are no different than a crypto coin. You know what I'm saying? When you're going and you're raising at fucking 100x of
Mm-hmm.
rev, come on,
Mm-hmm.
bro. You know, like that's no different than a crypto coin because to me, there's no intrinsic value that backs that valuation up. It's just people who have
Stupid money
money
doing
that,
stupid
yeah, that
things.
needs to be placed.
I agree.
But is there true value? No,
I agree. But I don't know. There,
they
there's a
are
lot of
bananas.
liquidity buying that stuff, and there's a lot of employees that won't be employed soon when their burn rate's too high.
I do think the creator and gig economy will still keep picking up. Even
I
though like you
agree.
aren't employed, I think that there's so many independent contractors now with COVID. Everybody had to work from home anyways. All those skills were learned, and so all those skills are in the marketplace now. People don't necessarily need to work; they can go work for someone else and be wherever they want, do the
Totally
job
agree.
for 20 hours a week, make the same amount of money, and they're fine.
Totally agree.
So that
I
I
I
think
agree.
that offsets that at least that tech space because like those everybody's looking for developers, dude. Everybody and developers are fucking expensive,
Yeah, they are.
right? So like everybody's looking for developers, everything in that space unless you're doing some bullshit HR, right?
Hmm.
Everybody needs that.
I agree.
So I don't see
No,
that causing too much. You could say it's unemployment or whatever, but do they still have money coming in? Yes.
I agree.
What other big points did we have last 2 weeks?
I think that's it. I guess the last one to kind of talk about is we have CPI next week. So the next week when we talk, we're going to know whether or not the Fed raises 75 basis points. Current forecast is for 8.6 CPI, which is even from last month. I'm actually calling 8.8. I'm putting it out there. I'm guessing 8.8. I'm guessing it comes in
So if
hot.
it's above that's consumer price index. If it's above
Mhm.
the CPI, define what that means. If it's below or even, define what that means.
Yeah. So last month we had 8.6 CPI, which is consumer price index, food. It's headline, not core. Headline, food, gas, rent, all of that. And this is what the Fed has identified as a problem. So uh, there's a lot of people like Kathy Wood hoping we've had peak inflation. What I'm telling you by calling above last month is we have not yet had peak inflation. And if we get an 8.8 next meeting, you can guarantee the Fed raises 75 basis again in July and
Okay.
probably 50 in September.
I I just as I'm starting to learn more and think about it more, I'm just like, well, they just need to keep raising rates and I keep them going, see them going just 0.75 every time they can. And it'll just keep going until like they kind of kill the baby
And yeah,
and then
they're
they
they're
feel
gonna
better.
they're gonna go until something really bad breaks. I agree with you. I think that's well said.
And then is Kathy Wood like a trader or whatever? You talk about it all the time. I don't even know who she is.
Kathy Wood is she runs an ETF. It's called ARKK, ARKK. That's her.
Define ETF. Like what is
ETF, you can think of it almost like an index fund. It's a collection of other stocks rolled up. ETF, it has some kind of trading tax reasons that I don't
Okay.
understand, nor do I care about. But basically, Kathy Wood has had an amazing 2 years. She was the number one capital allocator 2 years in a row, which is hard to do. But she was only number one because she had great timing. She bet on all these companies who had no earnings but high valuations and won. And now she's losing. I believe she's hurting lots of people. That's why I keep bringing her up. She has a great story, a great stick. 5 years in the future, deflation's coming, blah blah blah. I think she's hurt a lot of people. That's why I keep bringing her up.
I mean, but how about Ray Dalio though, with the 30% up like a fucking boss?
32% sick, dude. That's a 6 month return. That's not even annualized. You annualize that shit, 64%. That is
Right?
some
Like
baller
a
shit right
boss.
there.
Like the fucking man. And he doesn't take on any other money from they don't take on new investors at all,
No,
right? Like they haven't for a while.
he shut his I think his number one fund is Alpha Fund. I believe it has been shut to excess capital for a decade. Just because he had too much money. He's just like, I don't need any more. Having too much money is a problem. But yeah, 32% in 6 months.
And so
Boss.
Kathy Wood won't even come close to beating him, right? Like was she doing good?
She's down 72% this year, so no.
Awesome. Well, where can people find out more about you, Mike?
One rental at a time. Go to the website, YouTube channel, Instagram. Always having a good time.
Awesome. Thank you so much for coming, Mike.
Take care.
See you guys.